It is expected to be another tough day for Australian shares after Wall Street fell hard overnight. The ASX dived around 2% on open as a recession fears the world's largest economy sent global markets tumbling. On Wall Street, the S&P 500 fell 3.25%. The Dow Jones dropped by 2.4% and the Nasdaq plunged 4.1%. The US market selling off after the biggest interest rate rise by the US central bank in almost 3 decades, leading some to question whether a recession is inevitable.
As it stands right now, I believe there will be a very short and shallow recession. However, if the Federal Reserve gets too aggressive, raising rates too aggressively into that slowing economy, which in all likelihood may be in a recession by the end of the second quarter, we run the risk of going into a much more drawn out and extended recession.
Today's market plunge means that in the past 8 weeks alone, the Australian stock market has lost more than 14% of its value. So why are markets falling now with pricing in an economic slump? Business editor Ross Greenwood explains.
Well, the reason for that is because of interest rates. And really, it's not so much the stock markets that are pricing in, though they follow the bond markets. Now, the bond markets are really government bonds, and so that is the price of money, the price of interest rates here. So to give you some small example, here's the 10-year bond in the United States, 10-year government bond. Now, if we go back to July last year, the yield there was 1.226%, as you can see. Today, the yield on that is 2 percentage points high. So these are for long-term bonds, not for short-term bonds, for very long-term investments. And the fact that that is rising as fast as it has is really where, if you like, the markets are saying that we believe that really the interest rates are going to continue to rise, and as a result, they're not going to be able to head off the economic downturn into the future. This is what's happened in Australia. The same bonds, 10-year government bonds, these are issued by the Australian government in August last year. They were yielding 1.075%. This morning, yielding just under 4.1%. They have been as high as 4.2% in the past couple of days. And so even here in Australia, the trajectory of those interest rates say not only is the Reserve Bank going to have to continue to raise rates, but also that the risk of an economic slowdown here in Australia is becoming very much more real.